All right, good morning, everyone. This is Brian. We're here for Forex Live. This is our Tuesday morning edition. Today is Tuesday, February the 18th, and it's 8 a.m. Central, 9 Eastern. Before we get started with our class, we need to let you know that unique experiences and past performances do not guarantee future results. In fact, surprise, trading might involve risk. So we're going to pause for a moment, give you an opportunity to read through this disclaimer, and then we'll get started with our trading day. All right, that should be long enough. All righty, hope you guys are doing well. Had a nice holiday yesterday. So coming off of a bank holiday, we had some movement in the market, and now we're going to be back and see what we can find for the day to find some trades. So we should have a couple of things open. One is the daily report, so we should have open the daily report from Forex Joe. We should also have open our daily trading regimen, which is here. And this is the 12-step program that we walk through each time in order to find trades. And then we should also have open your Forex alert from Forex Joe, which will give you everything that you need to know about the market, what's been going on, and what Forex Joe is looking to occur over the course of last night and into the trading day today. Gave us a couple of buy and sells, some experienced trade moves, and whatnot. So we should always read this report when it comes out in the evening and prepare ourselves for the upcoming day. What we'll be doing today is we'll be utilizing this 12-step methodology here, and we'll be applying that to live market conditions in conjunction with the daily report. So we should have those things open. Also, your MetaTrader 4 terminal, what we use to place our trades. So let's go ahead and get started. We'll go through this pretty quickly. I don't need to spend a whole lot of time on it, but the purpose of our call today is for education. We want to make sure that you're, obviously you have your materials that you go through on the members area, part of the site, but this is a component that we're able to apply live, so you can ask questions, number one, and then number two, you can see the methodology applied under live conditions. So the purpose here is to train and just talk through this. Obviously, we're going to take trades, but those trades aren't guaranteed in any way. They're just training opportunity trades for us. So let's see. So let's get things started. We're going to start with the Euro USD, and we'll go through that one pretty much in depth. Then from there, we'll jump into Pound USD. We'll go a little bit quicker, and then we'll go full speed on the US yen. And the purpose of kind of ramping it up that way is to help you see what we're doing, why we're doing it, and then really see how quickly it can be done. And, at the end of the day, once you learn the trading method, you're probably not spending more than about 15 minutes or maybe 20 on the outside to watch the market and set up your trades each morning. And then, of course, from there, the software manages it for you once you're already in that trade. So we'll talk about how we could do that. All right, so Euro USD. Just get that recorded here. Euro USD, number one. And what is our current price? Well, we really have broken out of an area here. We're currently trading at 37.43, it looks like. So 37.43. Now, we've got that captured. Now we're going to pop over to our daily report and have a look at what our channel information is telling us. And here we're able to see that we have a channel bottom at 36.81, and we have a channel top at 37.28. And notice here, 37.28 is a daily channel and a weekly channel. So we see this lining up. 37.28 is a 2 of 3 channel. That's going to be a little heavier number for us, so we'll want to keep an eye on 37.28. All right. Bottom, 36.81. There's no alignment there. We do see below that, 33.29. If we did start breaking down, that could be a big number for us to watch there. From a support resistance level, 37.43 is where we're currently trading. So what do we have? Well, above us, for resistance, we have 37.70. And then down below us, we have 37.29, which is right there, 37.28 area. That adds some even more emphasis to that number. If we break through there, additional support down here at 37.23 and then 37.07. All right. Next up, are we trending or are we oscillating for the day? Well, I think we can all agree that we are trending for the day. We're in a bit of an upward trend, it looks like. The big question, though, even though we can definitely see here that we're trending, is have we broken our channel? Have we broken above 37.28 or below 36.81? And the answer there is yes. I mean, we're trading at 37.43, so obviously we've broken through 37.28. So yes, we have broken our channel. What's the average range? Well, today we've moved 54 pips. So it looks like a lot, but it's all relative, isn't it? There wasn't much movement at all yesterday since it was a bank holiday. Uh-oh. Where am I? My toolbars took off on me. This happened the other day, shortly after the upgrade. We'll throw a couple of my toolbars back on here. We don't necessarily need all of them, but I really like to have at least this one. All right, so yesterday, U.S. banking holiday, we moved every bit of 15 pips. So really slow day. So obviously this is relative. This looks like it's a huge move. It's only 50 pips. I mean, 50 pips is still a lot of pips, but it's moved 50 pips for the day so far. Average range, it has really consolidated quite a bit. We talked about this last year. Coming into the summertime blues, typically the euro is moving in that 90 to 100 pip range, but then it never got out of summertime blues. We had the consolidation in the summer, came out of summer into some government shutdown, followed by just uncertainty in the marketplace, and here we are. We're sitting with really no movement at all. So our average range is consolidated from that 90 to 100 pip range down to about 60 pips for average daily range. So not much movement at all in this pair, but we know that we're 54 pips on an average range of 60. We're probably getting kind of near the end. So it just lets us know, if we're looking at a beautiful buy, probably not a great spot to buy it if we're already at the end of the of what the range typically is. All right, next up, news. Is there any news coming up? So we want to know this so that we don't step in front of a bus, or if we have a high impact report that is suddenly slated to come out, it might cause total directional change in the market. So is there any news? And we don't see any high impact news. When we look for news, we're concerned here with these red reports. So the red reports are the highest impact reports and typically have the opportunity to kind of cause a lot of whip in the marketplace. They can cause spreads to widen drastically, or they can cause the market just totally to change direction depending on deviation from the forecast of what that announcement was planned to be. So is there any news coming up? Nope, there's no news. But the goal here is we don't want to trade the news. We just want to know when to stay out of the marketplace. If we have news coming up and it's high impact, then it's best to keep our fingers off the button. If we've got news coming up in 15 minutes and we see a nice trade setting up, better to be on the safe side and just wait it out, stay out of the market and wait for the news to occur and then look for opportunities to get in following that news event. All right, and then finally, the last thing that we're going to look at is the futures market to see what's occurring with gold, silver, Dow, and crude. And we look at those items because that typically gives us a good indication of whether we're seeing dollar strength or dollar weakness. Now, again, this is a odd thing. We're a month and a half into the year, and this is kind of the direct correlations haven't been acting in the manner that they typically do. So again, this is along with our average range and some other things, we've got just some anomalies in the marketplace. Typically, we watch this because as we see the Dow increase, as we see crude increase, gold and silver increase, then we see the U.S. dollar decrease. So as we're taking positions here, we're cashing out positions that are liquid in U.S. dollars to put them into other futures. Conversely, as we see the Dow dropping, crude dropping, gold and silver dropping, then we typically see the dollar increasing, and that's because we're taking positions from here and we're holding them in liquid U.S. dollars. So, but again, this year things have been really, really flat. Not to say that we haven't seen movement. There's been big bursts of movement here and there, but overall, it's been a very, very flat marketplace. Now today, we're seeing slight positive in Dow, slight positive in crude. Silver's up a little bit. Gold's pretty much even, and we're seeing a slight negative in U.S. dollars. So right now, there's a slight lean towards positive futures market, which would indicate dollar weakness. We'll want to watch that, especially as the floor traders come online here in about 15 minutes, 20 minutes from now, to see if that really changes. So, I want to keep an eye out there and kind of play things close to the vest, keep it safe, working up to that 8:30 Central, 9:30 Eastern time frame when our floor traders come online. All right, so we've gathered a bunch of information. We've kept our fingers off the button. We haven't gotten too excited about anything that's happening right now, and now we can go place some trades. So what are we going to look for? Well, we know we have a channel top at 37.28, which is right down here. Let's put in 37.28. It's right there. So we know that was a channel top that has been broken. We saw price push through it, repel just a bit, and then right on the U.S. Open it's just shot up off of that 37.28. Now 37.28 is a 2 of 3 channel, and it was a support resistance level, which is a support level now. So where would we look to place a trade? Well, for me, we're trading above it presently. If we can pull back to 37.28, I will look to buy it off of this level. So we're going to park a buy right down here, and all we would do to do that is we want to have our pending order pro software installed, and then we just simply grab a buy line, we drag it down, so the thick green line is our buy, drag it down to 37.28, and then we're going to set our stop loss. We want to keep that fairly tight. We'll give it 8 pips or so down here at the London high, and then we'll look to take our profit pretty quickly as well, and see if we can grab some pips on a bounce if we pull down here to 37.28. So we're going to take profit there, set both take profit levels. Once we've got our lines where we'd like to have them, we know what our maximum risk is, we know what our take profit 1 is, and then we can go ahead and move to buy. Now with this said, once we move to buy, we're going to have a pending order placed in the market. So now we have a pending order placed here at 37.28. We have our stop loss that's down here at 37.17, so about 10 pips. We have our take profit right up here, 37.39 area, and then take profit 2 at the next grid up. So we're all set, ready to go. If at any point we want to adjust our trade, we can just simply drag the green line if we want to change where we enter, or if we want to change what our stop loss is, change our take profit levels. We just drag the lines, and that makes it happen. Very easy to use from that point. Also, we know what our maximum risk on this trade is. The maximum risk is our entry point, is here our entry point to our stop loss. So we know what our maximum risk is, but the cool thing about the software is it can only get better. So if we enter the trade and we hit take profit 1, we don't have to worry about doing any manual adjustments. The software automatically peels off 1/3 of our trade and then sets our stop loss to break even plus 1. So automatically we're protected once this trade moves in our favor. We don't have to worry that the trade moves in our favor and then could come back against us and take us out for a 2/3 loss. So the software protects our wins by peeling off 1/3 and then capturing stop loss at break even plus 1. So that way we can stay in the marketplace and capitalize on a longer term move. So there we have that. As far as where would we look for a potential sell order, or do we even want to look for a potential sell order? We're coming off the day following a banking holiday, so it's going to be a little bit of an interesting day as our market makers look to reposition themselves on where they'd like to be. 37.70 is a resistance level. It's a resistance level from our daily report, and it's pretty much the top of a range. If we look at bottom to top, we know that this pair has been moving about 60 pips on average. This is 75 pips right here to 37.70. Now, if you really wanted to scalp, it's totally a counter-trend trade, which is why I'm not horribly excited about it. But we could park a sell order up here and see if we couldn't scalp some pips on a quick bounce off of this. And it looks like it hit it once and already bounced. So we may be in for a tough ride there. Not horribly excited. Under regular conditions, if this weren't the day following a, it shouldn't really matter. Let's go ahead and park that trade. We need to stick with the method, right? We can't pick and choose. If we have a trading method, we can't really pick and choose when we want to apply the aspects of it. And our trading method says if we're exceeding the range and we've got a level there, then we should go ahead and take a trade off of that. So we're going to do that. We're going to keep our stops tight though, and we're going to go ahead and set that. And according to Forex Traders trading methodology, we're looking at the end of a range. So it's the end of the buffet line, as Forex Joe likes to tell us in training. And so the buffet line being the number of pips as typically moves on a day. So if we've already exhausted the number of pips that we move on average, it's okay to start looking for reversals up there. And we've got a support resistance level up here at 37.70. We've exhausted our typical range, so good spot to look for a potential reversal, and we can go ahead and sell off of this level. Now again, we're going to take our profit quickly. We're keeping our risk low, and we're also going to take our profit pretty darn quickly as well. Okay. Yeah, so about 9 pips there, 9 pips to here, and whoops. There we go. And we'll look to sell it off of that top. All right, so let's do this one more time on the pound USD and go a little bit faster here because we've already gathered a lot of our data, so we can move faster. So it took us about 17 minutes on that first one in gathering data, talking through what we're doing, the initial intro and whatnot. It really only takes a few minutes for each currency pair that you are trading. So let's do this again. Pound USD. Pound USD is currently trading at 67.13 here on the pound USD. Channel top. What's our channel information telling us? Well, what do we have? Scrolling on down, we have 67.65 for our channel top and 66.38 for our channel bottom. So 67.65 and 66.38. Support resistance levels. What do we have here? Well, 67, so above us we have resistance at 67.41, and if we break through that, 67.65, which coincides with that channel top. To the downside, 67.41 we said down there, and what else do we have below that? We've got 66.94. If we break through 67.65, we've got 68.21. Okay, so just capturing a few numbers there so we can see where we're going to be. Are we trending or oscillating on this currency pair? What's going on here? Looks like we are oscillating a bit. We're in a downward trend for the morning. We started the trading session here, pushed down, pulled back up to the 6,700 area, and repelled off of it, pulled back up. We're kind of back where we opened, so not a whole lot going on. So it looks like we're oscillating a bit for the morning. Doesn't mean it's going to stay with that. We need to find a direction at some point here. Has the channel been broken? That's the big question. Have we broken above 67.65 or below 66.38? And the answer there is no. We have not broken our channel. Average range. Well, today's range, we've moved 86 pips today, and our average range, again, just like our euro, we've consolidated quite a bit here. Typically, the pound prior to the middle part of last year was moving in that 100 to 115 pip range. Right now, it's about 71 pips. So we're not seeing this more that 70 to 80 pip range right now, and that would be top to bottom here. We were seeing that move. All right. News. Well, we know that there's no news coming up, and the futures market is mixed with a slight lean towards dollar weakness. And we'll see if that continues. We want to keep an eye on that here in about 10 minutes as our floor traders come online, and see if they're going to make any moves following our bank holiday yesterday as they get fully underway. All right, so what are we going to trade? Well, let's see what we've got. Well, we know we've got 66.94 down here below us as a support resistance level. So we can just move this up here. $66.94. We've got 67.41 up here above us. And we've got 67.65 as a channel top. All right. And if we consolidate our channel just a bit, we've also got, it's right here, 66.94. We've also got, basically 6,700, 6,710, right where we're currently trading. If we do this, compress our channels just a bit, we see that this is kind of a decision point for us right here, which is kind of to be expected, right? We've got 6,700, a big whole number, so it makes sense that we'd be sitting in this 6,700 to 67 or 6,710 to 6,690 range, which is about a 20 pip range, to break out one direction or the other. But we're not really looking for breakout trades. We're looking for the safer trades. So, we know that we're 80 pips top to bottom here. If we did push, to 67.65, which is our channel top, and it's a support resistance level, that's 110 pips. Even under normal conditions prior to the consolidation, that is the end of a range. So I'm going to go ahead and park a sell. If we get to 67.65, this would be a great spot to look for a reversal. Now again, we're looking for safe trades. We're not looking for trades to just blow things out right now or look to scalp. This is basically our Monday. Today's Monday in kind of our trading world, since we had a banking holiday yesterday, so things are going to start off a little slowly, and then we need to watch what the directionality is going to be from the market makers. So, today we're going to keep things on the safe side and look for key areas to buy or sell from. And that's what Forex Joe's method is about. It's all about looking for key areas that we can trade from, and then entering our trades off of those. So being patient, letting the trades come to us, letting the trades find a key level, and then entering the orders. Now, where do we look for? Where are we going to look for buys? Well, a couple of spots to look for a buy. This is a decision point. We really need to see what's happening here at the 67.10, 67.08 area. We've over the course of the trading day during London, we broke through this. We came back. We retested it. We pushed back up, and we're currently retesting this 67.08 area. So for an intraday trade, we really need to watch this. So we have a candle that closed above. We've got this candle that's currently testing it and is back below. So we need to see where is this candle going to close. If this candle closes above, then we would enter a buy order off of 67.08, 67.10, and look to take it to the upside. If it breaks below, then we'll want to see a confirmation of that break, and then we would sell it off of this area. So for intraday trading, we really need to see what's happening with this candle over the next 5 minutes, and then we need a candle following that to let us know directionality, and then we can decide where we're going to trade off of this 67.08, 67.10 area. So for the pound, as far as orders I can park, I'm comfortable parking this 67.65, channel top, support resistance level, end of a range under normal market conditions. That one's solid. I'm happy with that trade. Doesn't look like it's a trade that may get triggered in unless we see a burst of movement, which could very well happen. But I'm happy with that trade, and that's where I would keep it. So as far as this other trade goes, we would need to see where this closes and then watch the next candle to see what we're going to do for buying or selling off of this 67.10. So we'll come back to this one in just a couple of minutes after we get through the yen and see if we have a trading opportunity here. So the U.S. yen is currently trading at 102.40. 102.40. USD, JPY. And what does this tell us? What are we seeing here? All right, scroll down. I have a very vocal bird here next to me today. It's making a lot of racket. All right, so what do we see? Well, we've got a channel top at 102.25, and we have a channel bottom at 101.44. 101.44 is a 2 of 3 channels. So let's make a note of that. That's a big level for us. If we did push down to 101.44, that's our channel bottom on a weekly and a daily level. So this is a much more significant level here at 101.44. Support resistance. We're trading at 102.40 presently. So above us, we have 102.60 as resistance. And if we break above that, we have 102.83. To the downside, if we break back down, we have 102.03, which is right there, that whole number, 102, big number for us. And if we break through there, 101.76, followed by 101.65, and then of course we have our channel bottom between here and the next one, that is 101.44. Are we trending or oscillating for the day? Well, looks like we're in a bit of an upward trend for the day. Had a burst during Asia, and but it's really been oscillating through the London session and now into the U.S. session. So a bit of an oscillating market. Have you broken above 102.25 or below 101.44, though? That's a big question, and the answer, of course, is yes. We know that we have. We're trading above it currently. So, yes, we have broken above 102.25, which is our channel top. Next up is our average daily range. Average range today, we've moved 98 pips, so about 100 pips today, 98 pips. And our average range, again, just like our other pairs, it's consolidated quite a bit. Our average, longer term is that 60 to 70 pip range on average, 60 to 70 pips. So really pushing top to bottom here really blew out what our average range has been. Of course, we know, looking back over the course of a year, that prior to the consolidation during the summertime that we never came out of, this pair was moving into that 80 to 90 pip range on average. All right, so what are we going to do here? Well, we know that the futures market hasn't changed much. We can flip it back over for kind of a cursory glance, but we're not going to see much change here until our floor traders get fully underway, and they start here in just a couple of minutes, and then probably 15, 20 minutes after that, we'll see what they're going to do with the marketplace. And then, of course, news. We know there is no news coming up for the day. All right, so what are we going to trade? Well, 102.25 channel top has been broken, and it hasn't been retested. So that, of course, is going to be a level for me that I would want to take a trade off of. Again, if we look at Forex methodology, we know when we have key levels of support or key levels of resistance, once they're broken, they become the other. So if we have a key level of resistance, in this case, this was a channel top, it was resistance, the price just blew through it. So if we have a level of resistance that's broken, it then becomes support. So we saw this level broken, but we haven't seen it retested. So we know that what is resistance once broken becomes support. What was support once broken becomes resistance. So for me, kind of the textbook play from Forex methodology here is to go ahead and place a buy order right here. I thought I had, what is that? Take profit 2. Where's take profit 1? It was hiding out. Okay. I'm going to have to reset that chart. For some reason, that chart is acting up on me. Alright, so let's try this again. So, we're going to move our buy. So we're trading above it presently, and we haven't retested 102.25. 102.25 was our channel top. We've broken it, but haven't retested it. So if we pull back to 102.25, we're going to look to buy off of that level, and then we'll take profit just a little ways above it. We're going to look for 8 to 10 pips here, and then we'll keep our stop loss pretty tight as well on this one. And then we simply click move to buy, and voila, we're in the marketplace. As far as looking for sell opportunities, we could really push back up here to the top, 102.83 or 102.60, looking like areas that we could sell off of. 102.60, 102.83 is probably a little bit far for this thing to move, but we could certainly look up here at 102.60, which is support resistance level in this case, and 102.69 just above it, hide behind that. And we could look to bracket an order in here and play this just like so. So ultimately what we're doing is we're looking at this channel top that was broken, it hasn't been retested. We're looking to buy on a retest of that level, and then we're looking at 102.60 because it's the end of a range of what we have been normally seeing under normal conditions. So if we get back to that level, it's a resistance level for us, and it's the end of a range, so we can look for a reversal there. Once those are set, we just simply click move to buy, move to sell, it should take just a second. These will click over. I don't know why that's not clicking over on me. Valid price parameter. I don't understand what's happening here. Let's reset that one more time. Looking for pending order FTT, pending order pro. We're going to buy off of 102.25. Take our profit quickly. I think I maybe didn't wait for this chart to fully reset before I started trying to place my trades, and as a result, it's being a little bit finicky for me. So again, same thing we just did a moment ago, exact same reason, same reasoning behind it. Get these trades parked. Once we're in and we're set, then we just simply click, and we can click move to buy and sell, and there we go. We have both of these orders pending. This will take just a second, and it'll click in for us for our pending orders. And once those are set, then all we have to do is let the market do its thing, and we're ready to go. So that's what we do. That's the methodology that Forex Joe teaches us. So from here, I'll turn over to Forex Joe if there's anything you'd like to add, and then we can wrap it up.
Okay, thanks, Brian. Yeah, we're going to make this real quick today. I haven't done much work. I kind of took a long holiday, so I've been up working on some other projects this morning. We got a newsletter that's going out this week, so if anybody has any questions, I'll answer any questions. Other than that, we'll get ready. It's interesting that the euro went through the 37.50 range, and it really had to do, we saw the Empire State Manufacturing Index that dropped in February down to 4.5, where it was a consensus of 9.5. So we'll just see how high that can go. 38.27 is the next key area above. So right now it's 37.28, 3,800, and the 38.29 area, actually, at 38.29. So if nobody has any questions, Brian's done a terrific job of explaining everything today. We'll see how these all plug in, see what happens. I'll come back with a report later on today, and then we'll get back in the swing of things here. Thursday, there's some news events coming hopefully you placed the trades here the last couple of days, because some of these trades kicked in. We had a short market on Monday because of the holiday, but some of the trades kicked in and they get trade alerts from yesterday. But we got a lot of news on Thursday, especially in the euro. Before we come on board, there'll be like 4 Eurozone news events. Then when we get ready to go online, we'll have the CPI, we got jobless claims, and later on the Fed survey, and then Yellen's going to be testifying again from Thursday, which was postponed from last week. So there'll be a lot of events that'll be leading into Thursday. Of course, we got the FOMC meeting minutes tomorrow. That'll be interesting. PPI for and housing starts. So we got some news that might drive some markets here over the next couple of days. I don't see any questions. Brian, you did a tremendous job explaining everything. We hope everybody had a great long 3-day weekend. Those of you that are getting back into the groove of things, welcome back. I'll get ready. I'll have the reports out today. Make sure you're placing all the trades that come out when the reports come out in the practice regimen account, and then using the trade alerts and all the other material when you're trading live. Again, if you have any questions, if in between classes, then make sure you send them to support. We'll try to get them answered as quickly as possible, or get them into the class and get them answered. And other than that, Brian, I'll turn it back over to you. Let's just get in the door, out the door. And I think that you've kicked in some trades today, and I think you'll pick up some pips.
Yeah. All right. Very good. Well, we'll do a recap later today. If the trades kick in, obviously we'll record what they did and talk through that. If they don't kick in, then that's fine too. You know, that's part of trading. We look for the levels that are going to have the most opportunity for us. So we want to trade off of those key levels, and then if sometimes they work, sometimes they don't. And that's just part of trading. You're not going to win 100%, and you're not always going to have your trades activate or kick in too. So, if we do kick in, then we have some trades today. We'll record a recap, put that on the YouTube channel, so you guys can watch those recaps and see what happened with the trades. All right. Well, we're back here on Thursday, so let's go ahead and wrap it up, and we'll see you then. Have a great one.